right. So at this point, I'm going to bring up Aaron Warwick, Quip QIPT, to talk about earnings.
Hey, Ben.
Good morning. How's everything going?
Not bad. Right before you turned to me about a minute ago, I had my Wi-Fi went down, so I switched to my phone.
Oh, all right.
Glad I
Well, that
did it
was
then. Glad I did it then
quick,
and not a minute after I got on. So,
quick thinking. Awesome. Thank you for joining us, Aaron. Happy holidays, by the way.
hey, you as well. Hope you guys are well.
All right, great. Well, the reason I brought you on is because QIPT had earnings 2 evenings ago, Wednesday night at 5 p.m. And I know that you're into the stock. You've written Seeking Alpha articles on it, so you're the expert in this name. I just wanted to turn the mic over to you and let us know what you think about this earnings report.
Yeah, it was an excellent report. I was very happy with it. Just the top line numbers, they grew. I think it was 37% revenue, 50+% on EBITDA, which is sort of the standard measure that's used in that industry, the EBITDA. So yeah, very strong report. But what was even more bullish is the commentary going ahead, which I sort of suspected because I think it was maybe 2-3 weeks ago we found out that CMS reimbursement rates for DME, durable medical equipment, was significantly increased for 2023, which wasn't a huge surprise. I think that was expected, and basically what they're doing is catching up with inflation. So it's sort of a lagging indicator, I would say, the CMS reimbursement. So Quip has already seen inflation hit their business, peak inflation hit their business, and now CMS is responding and they're increasing the reimbursement rates anywhere from 6 to 9%, depending on the item. But so really going forward, we should see most of that should not only be revenue, but it also should go down to EBITDA and the pre-tax bottom line, those increased rates. So very bullish looking forward for Quip on that front.
Cool. Let's talk about valuation. I see here on the net income line for 2022 is 13 cents. So obviously, if you're looking at a trailing PE, the stock doesn't look cheap, right? If you do a trailing PE,
Right.
obviously that doesn't work. Now, if you look at the adjusted EBITDA though from Q4 and annualize it, I came up with an EV to adjusted EBITDA ratio of 5, which is
Right.
starting to look cheap. But
Right.
I hesitate to use adjusted EBITDA. So what's your kind of forecast for net income for 2023, so we can kind of figure out what the forward PE might be here on this stock?
Yeah, good question, and something I'm planning to look at. I haven't looked at it yet. This is the first time that they've been profitable on a P on a or it's not a PE, but a EPS basis. Um, yeah, most companies in that industry, it's pretty common for them when you talk about buyouts, when you talk about when they present their earnings, it's usually they use adjusted EBITDA. So that has been, if you look at my Seeking Alpha articles, that's been what I've used. And you can look. I've in one of them. I don't remember if it was the last one or I think it was the one before the last. I showed a couple of recent buyouts and showed the adjusted EBITDA there and did a comparison. I think that Quipt, if I understand correctly, should be EPS positive here going forward. And like I said, that should be growing because of these increased rates and also just the fact now that so one of their strategies for growth has been acquisitions. And as they acquire companies, they gain more leverage and more scale. And so that should help them moving forward as well for earnings per share, as well as the adjusted EBITDA and revenue. And then in addition to that, one of the things I'm excited about for them in 2023 is they've been forecasting organic growth, which is something that they haven't had much of
Hmm.
because most of their growth has been inorganic. Part of that, they have been telling me, I've only been following them since COVID, but a lot of people thought, COVID would help them. I mean, they sell respirators and sleep products and so forth. And so they've been saying, COVID actually hurt them. And the reason for that is because when they go in and buy a rather small business, they're only selling limited number of products, whereas Quip, their catalog is much bigger, and so they want to cross sell. Well, to be able to cross sell, you sort of have, you have to be able to get into hospitals. You got to be able to get into to see physicians and nurses and so forth to let them know, hey, we've got these other products we want to sell you as well. Build a relationship with them, help let them see the value proposition. With COVID, they weren't able to do that. They've finally been able to have consistent access to hospitals. They've been beefing up their sales force quite significantly. And so in 2023, we're expecting to see organic growth. And I think perhaps one of the most
Aaron, you there? Okay.
am I back?
Yeah. Go
Okay,
ahead.
the
I lost
last
you for a second.
analyst. Yeah, I think it. Oh, it looks like I switched back to Wi-Fi. I came back up. The last analyst that asked a question said, "Well, it seems like 7 to 10% be pretty easy for you guys. Pretty easy bar to set." And the CFO kind of chuckled and clarified with him. He said, "Did you say 7 to 10?" And he said, "Yeah." And he said, "Well, yeah, that should be pretty easy for us to do, but we don't want to, we don't want to set the bar too high and disappoint." So
That was a
I
good
think,
comment. I did see
yeah,
that shared in one of the chat rooms. Yeah.
yeah. So anyway, very excited for what they've got going on there, and of course, they should continue their acquisitions. They one thing to mention as well is that they did extend their line of credit with their bank. It's so they have access to a total of 110 million. So, especially at these prices, we shouldn't see them raise any equity capital
That's
for any of
important
these
in this macro
acquisitions.
environment. Yeah.
Yeah.
Cool. All right. So let me just ask you as a good update. Let me close it up with this. Looking at the price of the stock and putting that in context with the report that just came out, do you think there's an immediate opportunity here? Do you think the stock should be re-rating to a higher level, or is it more of a let's wait for them to execute throughout the year and the stock will go up as they execute?
Yeah, I mean, definitely a longer term hold. I don't think that if there was a, re-rating, I think it would have happened yesterday. What I do think though is that um, they had several derivatives on their book. So they were, I mean, I don't want to go into the whole story of how Quip spun off of Viamed, but they got kind of a bad deal in that whole thing. And so they ended up needing capital. They ended up with a lot of derivatives on their books. Those are all off now. So they had warrants, they had convertible debt. So their balance sheet is really clean right now. And I believe that, that first we saw the stock drop to the strike price of the warrants, then we saw it drop to the price of the convertible debt, the strike price. And so all of that stuff's gone now, and I think that that selling pressure will be gone, and so I think the stock should grind higher. I don't think it's going to be anything immediate, but it's something I want to be have in my portfolio. And then the other thing I want to mention about that is that the stock seems to move the most when they make acquisitions,
Mm,
and
interesting.
because that's automatically adding revenue, EBITDA,
Hmm.
earnings. And then related to that is, I think we're in the time now. They're right below, or they're fairly well below the what's likely to be the Russell 2000 price to get market cap to be added to the index in May.
Cool.
But that said, I think they have enough acquisitions and organic growth in their pipeline that they could get up, they could sneak in there. And if they sneak in there, then it's pretty illiquid stock. I mean, it trades 25 to 50,000 shares a day on a normal day, non-earnings, non-acquisition day, and it really could be a stock that, frankly, if they end up getting added to the Russell, the forced buying for that could cause it to be overvalued.
Mm,
If and when that happens. So,
cool. Awesome. Aaron, thank you for that. Awesome
hey, thank
updates
you,
on
Ben.
everything. And you're over at Seeking Alpha under your name, Aaron
Yes.
Warwick?
Yep,
All right.
that's right.
Awesome.
You can find me there. Hey, happy
Thank you
holidays
for
to
your
you and all
time.
your followers. Take care.
Thank you. Take care. Bye bye.